This week, the Australian dollar traded from around 76 to 77.50, a 4-month high. It was the strongest major currency on the week and helped by the weaker US dollar. Domestic data had little impact. In the US, Fed Chair Yellen's comments at her semi-annual testimony before Congress weighed on the US dollar. She sounded less confident that low inflation was due to transitory factors, as the minutes had suggested. The minutes suggested that lower inflation in recent months largely reflected lower mobile phone service and prescription drug prices. Other Fed officials, including voting members at this year's policy decisions, also sounded more wary on the inflation outlook. Markets are now pricing the chance of a rate hike by December at around 50%. The Bank of Canada this week raised interest rates, showing that the Fed is now not the only major central bank in a tightening cycle. This reduces support for the US dollar as the US's interest rate advantage fades. In the US, President Trump's pro-growth agenda continues to face challenges. Donald Trump Jr.'s emails regarding a meeting with a Russian lawyer was a reminder that the investigation into the Trump administration's ties with Russia is not going away soon. Congress appears to be struggling with its ambitious legislative agenda. Senate Majority Leader Mitch McConnell delayed recess to give them more time to work on legislation. Republican leaders this week unveiled a new draft of the healthcare bill and aim to have it voted on by next week. It is, however, already facing opposition from Republican senators. Healthcare needs to be cleared from the agenda before attention can turn to tax reforms and raising the debt ceiling. Republican leaders aim to address all of these before the August recess. Domestically, Australian data gave us insight into the economy, but had limited market impact. The business survey was strong, with conditions and confidence both holding above long-run averages and rising. It indicates an improvement in the underlying economy. Meanwhile, consumer sentiment rose slightly, but remained in pessimistic territory for the 8th consecutive month. Respondents were mixed on their own finances, but overall, consumer sentiment could have been worse, given the increase in interest-only mortgage rates. In the week ahead, the highlight of the Australian calendar is the labour force survey on Thursday. We expect an increase of 20,000 jobs, which would keep the annual pace of jobs growth at around 2%. We expect the unemployment rate to take up to 5.6% from 5.5%, but most of this is due to rounding, with the participation rate steady to slightly higher. We also have the RBA minutes on Tuesday. The statement after this month's meeting contained only minor changes and retained its neutral outlook. Pricing for an RBA hike by the end of this year is around 5%. In the week ahead, we expect the Aussie to possibly probe a little higher towards 78 cents. Meanwhile, we see support around 76 cents. We'll speak to you next week.